Welcome to The Curve Weekly, the podcast that keeps you up to date with all of the money, business and stock market tea.
Brought to you by the Curve's research team. It's the latest insights on what's happening in the stock market, companies, other money-related news so that you can stay educated and ahead of the curve.
You can thank us later for sounding smarter than those finance bros at your next dinner party. Firstly, I want to thank everyone who applied to be my co-host today, because Sophie is sailing on a yacht somewhere. It sounds very bougie. And it is pouring with rain here in London and freezing and gross, but not complaining, not jealous at all. But we have chosen, drum roll, the lovely Sheenagh.
Kia ora. Hi, everyone.
Here she is. And this, just a reminder, this was her application.
My name is Sheenagh. I love The Curves. I've been listening to you since you started. Originally a Kiwi, but now living in London. I've always been interested in finance. My first job actually was in a call centre at a bank, where often they'd mistaken my voice for the automated teleprompter. And one customer once told me I have a beautiful voice for radio. So it feels like the stars are aligning. So yeah, would love to pitch in and talk all things finance alongside Vic.
That actually always cringes me out when people say they've listened to like since the beginning.
It's beautiful.
Oh,
the journey.
Yeah.
It's just, it's like when you watch a reality TV show in their first season.
Oh, yeah.
And it's like so authentic.
It's like the Selling Sunset, their outfits in season 1 versus like season 8.
It's beautiful. It's like the first Love is Blind season.
Yeah.
Everyone genuinely wants love.
Yeah.
It's great. But yeah, always been a big fan of finance, personal finance. Yeah, my first proper job was in a call centre at a bank and learnt so much. We learnt so much there. And the irony is that you had to kind of be providing like support to people on their finances. So you kind of had to learn. Yeah, so got an interest then. And then when I learned about KiwiSaver, I was like, this is incredible. I'm going to put the highest percent in that I can. So I went 8%.
Oh my God, look at you.
No.
How old were you at the stage?
21,
Yeah,
I think.
nice.
And I was just such an evangelist for it. And I went so hard because I was like, I want to buy my own place when I'm older. Long story short, I put lots of my KiwiSaver, saved so hard for like 6 to 7 years, was a bit of a hermit, just was so like single-minded focused.
What gave you that drive though? Because during those ages, for me, I personally found it so hard to prioritize that delayed gratification.
Yeah.
Like if someone was like, we're going on a holiday or we're going on a girls' trip, we're going shopping, I'd be like, okay, I'll save tomorrow, you know?
Yeah,
And like just to have that persistence is during your 20s.
I think I always had a goal of like financial independence, and I grew up in quite a big family, and I really was like, I probably was quite a feminist mindset, but I was like, I really want something of my own that is fully my own. And I'd seen, I guess, like I did a bit of an OE before I came back and started working in the bank and studying. And I was like, I kind of want this ability to have like a bit of kind of financial freedom. And so I think I just was like so focused. I'd print stuff out on the wall. Like I had a chart.
Oh, yeah, like manifesting kind of.
No, like I had a chart where it's like, you need to get to this, cross it off.
Yeah,
you need to get to this, cross it off.
Like a 30-day yoga challenge.
100%.
The stars. You're like, I'm getting closer.
And I was like, no one can see this. But it did like, there was a bit of like behavior, psychology behind that.
Yeah.
It was addictive, just saving. Anyway, I ended up buying my own place, like on my own with no family help. Like I really didn't.
Jesus.
Yeah, with my KiwiSaver and with my
amazing.
savings. Probably when I was about 3 years ago now.
Whereabouts was it?
It's in Wellington.
Nice.
Yeah, it's in Wellington. It was actually really scary.
Yeah.
But it was so exciting. And that moment when I got it, I was like, wow, the feeling of accomplishing something that you've put so much, that was the hardest I've kind of worked towards something in terms of savings. It felt incredible. But I must admit now, so I was like really good at saving and it was my key focus. And then I moved to London.
Oh, yeah. Yeah, I caught up with a friend the other night and he was like, oh no, you definitely don't save money in London. Like it's not
No way.
Yeah.
I think the idea of the OE, 20 years ago, where you could come and work in a pub and save money and go back to New Zealand and have saved a house deposit is like
Well, the
God.
exchange rate was like 3-1 then. So you'd
Yeah.
literally like triple your savings or what you had, or your earnings when you went back to New Zealand.
Totally.
So it did make sense. But yeah, now the coming over here, earning heaps and going back home is just coming over here, having fun for a couple of years.
Yeah,
and then going back home.
100%. It's the mentality too. So
Yeah,
I
yeah,
must say I'm not as kind of financially savvy now.
Yeah.
You know, social life is great.
Yeah.
Savings is absolutely miserable.
Well, you're still keeping up the knowledge. You're learning. You're listening to The Curve, which is great. How did you come across us, if you can remember?
Okay, so I was always a real big like podcast fan.
Oh, yeah,
early
okay.
adopter.
Yeah,
dare I
nice.
say. And I used to listen to there was this Australian financial podcast for women.
Oh, yeah.
Can't remember what it's called, but I would like try and find personal finance podcasts, and
Yeah.
some of them were quite dry. You know, like there were some American ones that were very like, you know, set towards a certain demographic. And then I think I just saw you guys in the old, you know, Apple
who are these
podcast
weirdos?
charts.
Yeah.
And then saw you popping up, and then friends were talking about it. And it was around the same time as platforms. I mean, I know you probably came a bit later than Sharesies, but there was like a real kind of push and conversation around like personal finance.
Yeah.
What is it? Investing, micro investing.
And it's once you start leaning into that, you
Yeah.
notice how much
Yeah.
conversation is going on around that. So now this is the part of the show, lol, where I kind of talk about some topics that have gone on in the world and the news, finance, investing space. So feel free to ask questions. I'm hoping that you're going to be way better than Soph, and then she'll just be out of a job.
Goodness. No one could beat Soph. Sophie will
She
write no
comes
charm.
back and I'm just like, sorry.
You're like,
Sheenagh
hey,
was
honey,
just
if you want to
so
go on
great.
another holiday, that's so fine.
So firstly, something I've noticed is that there is a lot of key people and key businesses that are selling stock at the moment. So firstly, Nvidia, do you know that company?
Yeah,
It's
no,
like-
I've heard about them. Aren't they like the most valuable?
Yeah.
The
Biggest company.
chips, right?
Yeah,
the
the
AI
chips that
chips.
go into AI.
Yeah.
All of that.
Yeah.
So it's kind of like the AI poster child. If you're like, a lot of people don't know anything about AI, but they want to invest in it.
Yeah.
That's kind of,
Yeah.
the go-to stock, I guess.
Yeah.
Their CEO has just sold, he's been selling for a while, and he's sold about nearly $700 million worth of stock since about June. We've also got the Dell founder, you know, Dell Computers.
Yeah.
Yeah. So the CEO and founder, Michael Dell, he's sold about 600 million of his shares. And he's already sold about $2.5 billion of stock. Walmart, the Walmart family is selling a whole lot of stock. Berkshire Hathaway, that's Warren Buffett's
that's Buffett.
company. Yeah.
We know Warren Buffett.
So actually one of the key executives there, so not Warren Buffett himself, but one of his like second in charge, sold $140 million of Berkshire stock. It's the
Okay.
first time he's sold since 1986. So
Okay, there's a real trend.
Yeah.
Is this normal to happen around this time of year because they, you know, perhaps post recordings or there's something where they're like, yeah, this is time to cash in?
there's a bit of that because these insiders, there's only certain times they can sell.
Yeah, okay.
And that's after like financial results have been released and everyone knows all the financial information of the company. Now you can sell. Whereas
Yeah.
before it's like, you
Insider
know information
trading,
that you
right?
don't. Yeah, exactly.
okay,
So there
okay.
is a bit of that. But it's also like when I say this guy at Berkshire Hathaway hasn't sold since 1986.
Yeah,
That's to me
40 plus years.
is like, and all these other, Walmart, Nvidia, Dell, like to me, it's like, what,
Is this
why are they
symbolising,
taking
representing?
profits?
Yeah,
if they
yeah.
could see that their companies or the stock market was going to keep going up and up and up, you wouldn't be selling. Like hands down, you wouldn't sell your portfolio if you knew that it was going to keep doing better and better.
I can imagine it would kind of be a cause for speculation, right?
Yeah, it would be
People are
like me selling
wow.
shares in the curve. It's like it would be a red flag. Employees would be like, okay,
absolutely.
like why, what, can you see something on the horizon that's not
Yeah.
good? Or is this as good as it gets?
Yeah.
Like that kind of thing. And so people are kind of looking at this going, okay, the stock market's up about 21% so far this year, which is massive considering it does
That is.
9% on average over the long term per
So
year.
is that the average total return has been like 21%? Is that or
the return this year?
this
so
year?
from,
Okay.
from the 1st of January to what are we? The end of September, 9 months, 21. And then last year it did 24%. So we've had 2 pretty good years. So these
That's
people's
interesting, considering we've been in a very inflationary environment as well.
So I don't know. Everyone's kind of a bit like, is this? Yeah, I don't know.
I can imagine the markets speculate, like really start to become a bit spooked when that happens and try and determine what that means, right? Get into the psyche of these insider executives to understand what do they know that we don't know.
And there's like a million reasons you could sell. Like it could be company specific or it could be personal, you know.
I'm ready to retire. I want a little bit of cash for my yacht, you know.
But also like you could buy, you might, if you kept it in there, you could buy a bigger yacht if you thought that the company was going to do it. So yeah, I don't know. It's just, I remember getting told when I was a young analyst, it's like a lot of reasons people sell, there's only one reason someone buys, and that's because they think the value is going to increase. And so it's kind of
so you can't ever try and make any assumptions. That's dangerous.
But when you do see a lot happening
it's a trend
at once,
a bit, maybe,
of like very, very smart people and smart companies, to me,
big time. So also, did not realize Dell was after Michael Dell. Imagine having a huge company.
I know.
Based on your name.
I know. Imagine if I was like Victoria Apple and then
Victoria Apple. That honestly is such a nice ring to it.
It does, eh?
Yeah.
I just kind of rolled
Victoria
off the tongue.
Apple.
Oh God, I know. Also, just on that bit about Warren Buffett, this just like completely spooked me when I read this headline. There's a fintech company that's been created.
Yeah.
And they've created a fund, and what they do is they use ChatGPT.
Oh my God.
And other AI platforms to replicate Warren Buffett's portfolio and other very good investors. But what they've done is they've effectively put like 30 years of newsletters, portfolio holdings, all of that into ChatGPT and gone, can you create a fund?
So, of course, they're like training the large language model to be able to think like one of the world's best investors.
But I was like, I want to do that. I wanted to do that before the podcast, but I didn't have time to put in 30 years of newsletters. But
that's it. It's getting all the data, right? And, and then there's like, it's really interesting. You know, there's a lot of question around AI and the ethics of like what data you're inputting and how you're kind of training this AI to think like a certain person, what kind of person. But if you look at isn't Berkshire Hathaway one of the most successful what do we call them, investment companies?
It's like an
groups,
investment company,
conglomerate.
It's done 14% return per year.
Wow.
Like if you think you get money in the
for
bank,
how many years?
2
like
3
50?
For 30, yeah.
30.
That's over the last 30 years.
Billions.
Yeah.
So this AI that they've created, is it a company then? Is it an investment firm? And they're saying, okay, so now we're going to use the best data analytics of this fund.
Yeah.
Okay.
So, I mean, I could probably go away and do it all myself.
Yeah.
But it's like, you could also just give your money to this fund that's done it. I don't know. It'd be so interesting to see how well it performs.
Because the data could hallucinate as well. Like, you know, the AI could hallucinate. I guess you'd need a person to be able to.
Yeah. I just think it just takes away the edge of an investment professional. I don't know. Like why would I go and put my money with Warren Buffett when I can now just replicate? I don't know. It was the first time.
Is it like cheapening your IP?
Yeah, exactly.
Yeah.
Yes, yeah. Articulate that very well. But I just think this is the first time. I know we've been using AI at the Curve for a while and like love it, absolutely love it. But this is the first time I'm like, holy shit. For the finance industry, like this could be game changing. Yeah. Like the fact that it could learn someone's investment style, replicate it.
But then what happens to the workforce of all those investment analysts?
I know.
Like this is where you start to see it's like the gains that it can have is extraordinary. But then what does that mean to like the talent and the workforce? Yeah. It's like when it happened with graphic designers.
Yes, exactly. Yeah. With Canva and stuff.
Yeah.
I know. It's quite wild because I'm sitting here, well, like if we started our own funds management company and the Curve Fund, but if everyone could just replicate that from ChatGPT, why would they invest with us?
Yeah, what makes us so special? Yeah. What's our unique selling point, right?
Because it's exactly.
Wow. But it's happening, and we have to run with it.
I just think there's going to have to be so much regulation.
Yeah, and maybe they're trying, but it's taking. Of course, like regulation is like decades behind innovation, right, and technology.
Yeah, it's like even now they're trying to like put curbs on social media. It's like,
oh yeah,
all the damage has been done.
100%, and the like addiction's there, and everyone's going to find loopholes.
Exactly. Yeah. If you're addicted to something, you find a loophole.
TikTok.
Oh God, I know. I'm like every night. I'm like, I'm going to read my book tonight, and then I'm like, next minute,
You're like, I'm just going to give myself 10 minutes to absolutely wipe my brain of any thought.
Oh, I think I need to sign up
I
to
see
like
timers.
Yeah, the 13, 14-year-olds, like they have timers and stuff in China and all that. I'm definitely going to have to do
Lockbox
that.
your phone.
Also in Australia, so Coles and Woolies have been in a bit of trouble, actually.
Okay.
It's quite an interesting dynamic in Australia because it is very much a duopoly.
Yeah.
You've got Coles, you've got Woolies. They both have real dominant market shares. And by duopoly, I mean it's two companies in an industry. When you don't have a lot of competition, you can kind of...
You can set the price,
Yeah,
right?
you can
and
do
so
some
you can say a broccoli
borderline.
is $4
Yeah.
when really they're buying it for 30 cents or what have you.
And the thing with the duopoly is that if someone cuts the price, then the other person cuts the price. And that's kind of a race to the bottom. So there's kind of this like unwritten rule of like, let's not
keep
fuck
our
with each other.
profits at a certain level
Yeah.
and let's not do any dirty work. Whereas
Yeah.
if you had a third contender who came in, like wasn't Costco trying to come in New Zealand or something?
Yeah.
And
I mean,
they're
there's
like,
Aldi and stuff, but
Yeah.
like, it's just, they're not big enough to make a difference.
to disrupt, right?
Yeah. And so anyway, they have been sprung by the regulator for doing fake discounts. So not like they're saying 50% off, but they increased the price before they did the 50%
I've heard
off.
about like, before Black Friday, everyone says that watch out because the week before your like AirPods are going to cost £50 more and then they're going to cut it. And it's all like
that's a really
smoke
good
and mirrors.
point. I remember someone gave me a really good tip and they were like, if there's anything you want, like AirPods, a TV, laptop, like whatever it is, if you've got your eye on something, take a picture of it, write down the price, but keep your eye on it.
Yeah.
And just be aware of if it is a Black Friday sale that
They're
if the
gonna
price is
hike
$100
it.
and it says 50% off, it is $50 because they do tend to increase the price.
Naughty.
So naughty.
But
we fall for it. Like it's like,
and then it's like, oh my gosh, £50 off, incredible. Even if it was like they jumped it up. So did the supermarkets have been found doing this?
Yes, and so it was all found because of these little caramello koalas.
Look, I honestly, the humble koala
Oh my
is
God.
like, I'm
There's chocolate koalas. It's like the headlines all across the AFR, like the Australia Financial Reviews is like the koala is the one that like it's so funny.
the koala is here to bust down the capitalist
It's like
duopoly and they're there for the people.
Like, woo, everyone's like, great marketing for them. Yeah.
That is brilliant.
But anyway, their share prices are both off. Like they've both fallen this week. So Coles and Woolies.
Okay, because they've been given a slap.
Yeah, they're getting, and I think there's just been so much attention on these two companies for so long, and cost of living crisis, people are getting pissed off. Like,
they know that they're setting the prices because they have the power to.
Yeah.
So, and it's feeling like everyone needs to eat, right?
Yeah.
Like you have to buy groceries, you have to be able to feed yourself and your family, and you know that what you're paying is unreasonable, to be honest.
And there's nowhere else to go.
No, there isn't.
You have
There's
to
no
go
other
there,
options.
And they're
So
making
what do you
billions.
think is going to happen? Like, because they've been slapped on the wrist, but do you think what it will take is either like really serious regulation to monitor the prices based on what is fair, or there being a big enough competitor?
I'm in two camps because I'm personally like, the more you regulate industries, the less the just natural market forces, work out and play, and then you kind of screw things up. Like as soon as you start fiddling with things, it's just like, but the fact that there is such a lack of competition means that I think you need to create an environment that is attractive for more competition. So whether that's like, okay, you can only have X amount of Woolworths stores in one state, or that those kind of restrictions, which opens up locations for another competitor, or something like that. But I think
removing the barriers to allow there to be more competition, so
and
the
then
market
kind of letting it run. Yeah. So creating that initial kind of
you've solved it.
Entice me,
guys. Hey, Albanese. hey. It's your girl Victoria Apple, actually.
Hey, have you thought about if you just restrict me?
I was just kind of, spitballing with my friend.
So you know that koala saga? I think I've got a solution.
Yeah.
Oh, but yes. No, I think the people are pissed off in Australia.
Yeah.
And there's been like the fact that these companies earn billions and billions of dollars. There's a cost of living crisis. It's just like, I think I hope this is the tipping point.
People feel like they don't have
But
power.
also, these stocks have actually done very well. They're great dividend stocks because they just churn out billions and billions of dollars.
So when you say dividend stocks, how does that kind of differ from like a, ETF or?
Yeah. So like if we take Nvidia, for example,
Yeah.
like their share price has just gone up and up and up and up and up, like kind of in a straight line.
Yeah.
Whereas with Coles and Woolies, it hasn't been like that. Obviously, they're not riding the AI wave, but they have consistently paid a really good dividend.
Okay.
So that is part of your return.
It's like a guaranteed return because they're always going to be in demand.
Yeah. So it's like 4, 5, 6% return.
Got it.
But you get paid that.
Yeah.
I mean, you can opt to reinvest it, but it's essentially like a very steady delivering stock.
Yeah.
Okay.
Okay.
And so, supermarkets, like telecommunications companies, utilities, like they all pay.
Because these are kind of like basic needs that people have.
Yeah.
So you're always going to be able to have a demand for them.
Exactly. And they've got good visibility on their like future growth. They know that there's X amount of people in the population. We've got this much market share. They're going to have to eat. It's pretty,
The mighty koala.
We'll see what happens. Yeah. Thank goodness for the little koalas.
So brilliant.
I just can imagine the PR company sitting there being like, whoa, we really didn't ask for this, but we'll write it.
The koala's just become like the icon of the cost of living crisis. It's like Thailand has Mooding and like Australia now has the Caramella koala.
Yeah.
Perfect.
Also in New Zealand, I don't know, this is also something that I am really frustrated with is this whole return to the office situation.
Oh, I have so many thoughts.
I feel like I'm a broken record, and every day, every week, there's another company that's enforcing everyone to go back to work, whether it's Amazon.
Yeah.
And I don't know, it's just, I'm like, I get it, but just
It's like throwing the baby out of the bathwater.
Yeah.
It's so extreme. It's like we are so sick of, we can't have flexibility and maybe ambiguity. So instead of maybe us finding a happy medium where you come in twice, everyone come in 5 days a week, and we are absolutely snapping back to what it's been.
And it's because the minority, good old Jane Bloggs here, she pisses around at home and now ruins it for everyone. It's like, just get rid of her. Don't change the whole system.
100%. And it's really interesting when you look at the kind of stats on productivity and engagement. And being in the office 5 days a week, it doesn't necessarily mean that people are more productive. Like bums on seats does not guarantee quality of work.
Well, travel time as well.
Huge.
Like, especially here, it's like you can travel an hour in the morning and the afternoon.
Oh my God, yeah.
It's like, that's 2 extra hours.
Yeah, cost.
Yeah, I don't know. I also feel like there's been a huge step up in participation of women in the workforce when there's been flexible working hours.
Isn't there stats that like it impacts women, the expectation of being in the office, right?
Well,
more than men.
The office was set up when men were the predominant workers, and that was a 9 to 5, and they had their wives at home
drop
to
the kids off school and pick them up.
And now it's like, get up with the play. It's like, that is not, we're not in that traditional mindset anymore. And I don't know, I was in the lift the other day and this guy jumped in and he was talking to this other guy and I was overhearing. I love pretending
I'm
I got
going
my
to talk about you in my podcast.
Yeah, pretend I got my earplugs in, but I'm actually my earpods. And he was like, it's not an attractive employee policy. If I was to look at two jobs and one was like, you have to work 5 days a week in the office, the other was like, you have flexibility, but we prefer you to be in the office, but you've got flexibility.
Yeah.
100%. Like,
treating me like an adult and providing me with the ability to manage my time and trusting me. I think it's the trust, isn't it?
Yeah. And I get it. Like, there's people that will slack off at home, but you can weed them out pretty quickly.
You absolutely can.
I don't know. I just think it's like, just give the people the flexibility. It's not that hard.
It's going to be interesting thinking about the impact of these companies for being, attractive in terms of talent, because that is, I remember reading something around like recruitment trends, and it was like the number one thing people ask for is flexibility, often over lots of other things that's like seen as such high value.
I reckon the time it will change is when, because right now there's almost, and we're just coming out of it, the employee has the upper hand. Yeah. Because it's a very, very low unemployment. When you get to a point where there's high unemployment, people will be like,
the pendulum always swings, doesn't it?
So I think, but I just hope that it is a that if anything came out of COVID, it's like this can work, you know, like we don't have to
And companies were doing it, like my workplace before I worked at a big bank, and they had flexible working before COVID.
Yeah.
And everyone loved, like it was seen as being like a attractive employer because they had that.
Yeah.
Everyone's had a taste. They're not going back.
Yeah, I know.
They're going back.
Yeah, no, definitely. But anyway, sorry, where I was going with that, after that rant, is that in New Zealand, the government has imposed that all public servants have to be back in the office.
I'm not across this.
Nah, I know.
Are you really?
Yeah.
To what degree? How, like 5 days?
Yeah, back full time in the office each day. And the reasoning, I read the article and I was like, the reasoning is because of the restaurants and bars and cafes and the CBDs are struggling.
And I mean, there is some fact to that.
Totally. But I'm like...
But I don't think that requires... And that also just thinking about like the behaviour of people. Like you can't expect someone to go from being in the office once a week to 5 days a week. Do you know how much that change is going to impact them?
Totally. And like childcare you'd have to get and like, I don't know.
And people would have moved away.
I think I get what New Zealand's doing here, and I know the bars and restaurants and that scene, the hospitality scene is really struggling, so I get that. But then what about all the cafes and restaurants in the suburbs that have actually done quite well? So I don't know.
Do you know if are the unions getting in on that? Because, you know, the public sector is quite unionised, and I do wonder whether there is some resistance to that. Like, because that's interesting when they kind of come into the, I know, you know, in terms of time, but it is fascinating how government can mandate that.
Yeah. They also quote like innovation, you know, like everyone's more productive when they're together. And I'm like, we at The Curve
Elon
are
Musk.
effectively a content creation company.
Yeah.
And we do fine. We
thrive on creativity.
We say we have 3 days where we're like, can you try your best to be in then? And that's like when we'll do in-person meetings and all of that. But like, it's not like if someone's like, I want to work
from home. It's about meaningful engagement, right?
Yeah.
If you're going to go in the office, make it meaningful, make it collaborative, make it worth people's time to actually physically be together.
Yeah.
Other things can be done at home.
Yeah.
Wow.
We could talk about this for hours. A few other things before we finish. So Nike, there's been a bit of news there. This was one company that we actually spoke about in the World's Biggest Investing Club that our founding members have access to. We're about to launch it to everyone else very, very shortly, which we're really excited about. So this is where we talk about certain stocks and ETFs each month. And Nike was one of those. And they have been struggling. I mean, we can just look around and see there's like so much more competition nowadays. Like
it is crazy. Like how you've got, it started with Hoka and Hoka.
Yep. That's one that they've
and
called
then,
out.
Like,
as
on running.
Yeah. And so there's been a lot of increased competition. They've got quite high exposure to China, and China hasn't been doing too well, and just really poor strategic direction from the CEO. Anyway, he announced last week that he is off. He is probably got the boot. You kind of only have, I mean, investors will be, patient for a wee while. Like if you become a new CEO, usually it takes you a year to kind of clean the decks, whatever, you know, figure out what you're going to strategically do for the company, hire key people, whatever. And then like a couple of years after that to really ramp things up. And this guy, John Donahue. And he looks like a John Donahue.
Oh, I can so imagine.
He
wasn't performing,
He
baby.
wasn't performing. And investors, like, you own, when you're an investor in Nike, you own part of Nike. You get to vote. You get to like decide. And in the board of directors
Democracy
will then action that for you on your behalf. And they've effectively said, I mean, I don't know if he got fired or asked to leave, but when the share price isn't doing too well.
I mean, you're in a highly
mutual,
visible public role.
But also the embarrassing thing, when he announced his departure, the share price went up 8%.
Oh! You just, when you're in that like much of a public high profile role, you just, man, your like self-esteem, your mantras every morning, you'd have to be like, I'm great. I
can do this. I know. I was just like, that would be the salt in the wound for me. Oh, if I left a company and the share price went up.
See ya, John Donahue. So we've got someone new.
Yeah. So they've got someone who actually left the company and then has come back. So he was head of like consumer and marketplace or something. I don't know. Anyway, he's like a veteran there.
Trusted.
But he's come back. So that might also be the reason the share price went up, because people are like, oh, he was actually really good when he was there.
Like with Disney, right?
Yeah. Look at you.
She's a listener.
But yes, it has been struggling. It's struggling. It's fallen about 24% this year. And like I said before, the market's up 21. So that's like 45%.
That's a lot.
Underperformance. But if you still believe in Nike and you think it's going to be around
Just
forever.
do it.
Yeah, just do it. So I quickly want to talk about China because there's been a lot of stocks that have done well because it's announced this new stimulus package. Now, what stimulus means is just it means government pumping money into the economy.
Got it.
They've decided, look, we're not growing as fast as we want. Let's pump some money in and hope things that'll do better. So what they've done is they've lowered interest rates, which helps fuel the economy, gets people spending. It's announced like I think it's like $30 billion package to buy stocks.
Wow.
Which is kind of artificially inflating a stock.
It
You're
is.
not supposed to, again, like I said before, like when markets are just supposed to, market forces
Kind
are
of
just supposed to happen.
overinflating it a bit. Yeah.
But anyway, I mean, it worked. Yeah, people are pretty excited. And then also gave all the banks a whole lot of money as well. So they're really trying to stimulate the growth in China.
Because it has been stagnant for a while, right?
Yeah. I mean, it's growing, but it's not growing as fast as it was.
Yeah.
And that it's a concern because it is one of the largest economies in the world and it reverberates around and ripples around the rest of the world. So, but we did see a lot of the luxury stocks jump last week because they think that people will be spending now in China, which is really, really good. We saw the likes of Tesla do well because they make a lot in China. Apple did well. Estee Lauder has done really well because, the beauty sector is like a lot of their revenue comes from Asia as well. So I don't know, there's just like all these flow-on effects. People are like, oh, okay, we thought it was going to be quite bad. Like even Nike we just spoke about, they weren't doing well because of China. Now China's got all the stimulus. It's like, oh, cool, that's going to benefit Nike. So it's like
total
thinking
knock-on
of these
effects.
companies, what companies will do well now because China's going to do well. Like the government's come in to save the day effectively. And which is great.
Giving everyone a leg up, right? Yeah.
Great for the Australian economy as well because
of course.
they sell a lot of like steel, aluminium, all of that to China. So all in all, pretty good. But it's also you can't keep doing that. You need a country needs to grow by itself.
Yeah.
Because or else the money's going to run out. And
Everyone should experience first class at least once in their lives, and Annie shouldn't miss out just because she can't afford it.
Help me, I'm poor.
Have you had any like financial faux pas or financial flex this week?
Okay, so just quickly, I've had quite the flex back, right? So, it's a new season, it's autumn. Did a wardrobe clear out and I was like, I'm going to make some money. Let's do this. So just honestly set aside an afternoon, posted everything on Vinted, made £300.
Amazing.
Sold things I didn't think I would get anything for. So honestly put stuff up there.
Yeah.
Like I sold a big puffer jacket that I thought I was honestly going to donate it. I sold it, got £90.
You also feel really good because you don't like throwing it out or like
and then I'm like, someone
clearing out
is
the-
getting a bargain.
Yeah.
And so I that has been such a huge win. And I bought some new season, I bought like some boots, which was a need.
Yeah.
So I was like, look at me go. Just that kind of, what is it?
Cycle.
Circular
economy. Circular.
So that was a win.
Yeah.
How about you?
I don't really have anything. But I actually did that and it's also on my list to do this weekend.
So satisfying.
I'm just like, these things are gathering dust.
You feel so, you're like, I'm amazing. Look at me go.
That will be mine this weekend.
Yeah.
Cool. Thank you so much, Sheenagh,
Thank
for coming
you.
in. I think Soph might be out of a job.
No. No, this has been so much fun. Time really flies when you're chatting finance.
It does.
Yeah.
Thank you.
Bye.
Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you
Only
did
the
hate
one.
it, please, don't leave one if you hated it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually, though, new episodes out every Tuesday.